So we're here again today at Level Financial Advisors to talk about, of course, coronavirus and the impact on the markets and the volatility. I'm Mike Heburn, the Chief Operating Officer and partner with Level Financial Advisors, and I'm here today with one of our advisors, Mike Angelucci, who's a CFP with the firm. And Mike, a lot's happened in the last couple of weeks since we last recorded something on coronavirus. It's been up, it's been down. Yesterday it was down 10%. Today, up almost 10%. So with all of this volatility, has our approach to investments changed in any way?
No, it hasn't changed in any way, Mike. We test these portfolios. We know that there's going to be shocks like this from time to time. And what we see when we build these models is they will sustain themselves over time. The trick is, and the hard thing is always staying the course. And I know people hear that over and over again.
Yeah.
But what people often don't see is the shock testing that we do to these models. And this is something that is not unexpected. We never know when it's going to happen.
Right.
But we do know we're going to have.
Certainly it's happened before.
It's happened many times before. And one of the things, and I know it sounds cliche, but that's when we approach portfolios, the stock part of somebody's portfolio is the long-term part of the portfolio.
Right.
We're not short-term investors in the stock market because we know these type of things happen. But what we do know is over 10 or 15 years that a global stock market allocation performs better than any other investment that somebody could own.
So, along those lines, what are some of the things that we're doing here at the firm that we're actively doing with the client portfolios? Because, of course, we've had other times where the market's gone down. I mean, in 1987, for example, the market went down, I think, 22% in one day. What are some of the things that we actively do on the investment side when we have a major downturn in the market like we've seen here in the last couple of weeks?
A couple things. One of the biggest things we might be doing for people, especially if they have brokerage accounts, which means they're taxable accounts, and we may have investments that they've brought over to us or that we want to change out for a better investment that may have had a lot of capital gains in them. And if those particular mutual funds went down and we want to put them in a mutual fund that we feel is better for them, this is an opportunity for us to sell out of that and buy the better mutual fund for them. Okay. The other thing we do is we might find that this is an opportunity to rebalance for people. And rebalancing is forcing an investor to sell high and buy low. So we may have some clients whose stock portfolio has gone down and therefore their bond allocation has gone up more than we want. And if it goes beyond the metrics that we're looking at, we will sell some bonds high and buy stocks low, which is uncomfortable for the average investor. And actually,
of course.
Yeah, and we're doing those things for the investor that they may not do for themselves if they were on their own because of the fear.
Right, exactly. So, we've heard a lot of investors talking about, I'm gonna move everything to cash, or let's get into bonds. Bonds are safer. What are some of the reasons why that might not be a really good idea?
One is if you do that, you're immediately cashing in on your loss. You're locking in your loss.
Right.
You don't technically lose until you sell.
So for example, if somebody did that today before the market went up, that you would have been locking in everything good or bad that happened right before it went up 10%. That's one of the examples.
Exactly, and it goes to the fear that investors have when things go bad. They want to run to safety, and that's the worst thing you can do because you are selling low in that case and locking in those losses.
Okay, well, what about somebody who's, we hear this a lot. I'm not young anymore. I'm 70 years old. This is going to kill my portfolio. What do we say to somebody like that?
Generally, with somebody like that, we would have already talked to them ahead of time. If they were a client of ours, we know what their need for money is going to be over time, and if, for example, maybe they might be 25% equities because they know that they're comfortable they're going to live another 10 or 20 years.
Right.
And we need some of that stock to help the portfolio grow over that period of time. So we would say to them as well, stay the course. We have enough in bonds to cover you for the next 15, 20 years based on your needs and your risk profile. We don't want to touch the stocks now.
Okay, good. So if you had one piece of advice to give to a nervous investor, there's a million things you could say, of course, but what's one good piece of advice that you might want to give to a nervous investor right about now?
Yeah, and this is hard because people are nervous, and when
everybody's nervous.
Everyone's nervous when they see their investment portfolio go down 20% in a few days.
Right.
It's very disconcerting. But what I would say is, try not to look at it. Understand that markets over decades and even centuries of market behavior have these kind of things have occurred. And what we do know is that when outflows like this occur, when people panic, things change sometimes very dramatically. We don't know when they'll change,
right?
But they'll change. And if you're out in cash, or if you've sold low and locked in your losses, you will probably miss the few days like today where the market was almost up 10%. Right. So the thing is, it's hard, it's uncomfortable, but this is not the time to change your portfolio. If you feel like this was too uncomfortable for you in the future, meet with your financial advisor and maybe revise your asset, your investment strategy and your financial plan.
You know, I was reading something today. Somebody was talking about the first question you might want to ask an investor is, have your financial goals changed?
Yes.
If your long-term goals haven't changed and you have a plan, then this is why we do financial planning. Exactly. This is why we have people invested the way we have them invested, because it's a long-term play. So
right, exactly.
Okay, so good. Well, again, this is Mike Angelucci, one of our CFPs or Level Financial Advisors. I'm Mike Heburn, the Chief Operating Officer. If you have any questions or if you're concerned, please call us anytime at 716-634-6113 or look us up on the web at levelfa.com. And until next time, have a great weekend.